Hi, this video is going to be an update on the market crash that happened recently and some changes I'm going to be making in my personal investments. Now, I don't normally use notes, but we're doing this video very quickly here. I wanted to get this information out as soon as possible. So I'm going to be making some changes in my personal investments, including some purchases of silver, some purchases of cryptocurrencies, and I'm going to be swapping some Bitcoin for another crypto project that I think is very, very promising. And I'll be telling my insiders about that later on in this video. That's going to be part 2, available for insiders only. So let's get to the market update here. Now, the video that I did at the beginning of the year, which was about 1 month ago, was titled Things to Come. I think it was Things to Come in 2018 or whatever. But in it, I talked about the market and I showed this is the Dow Jones Industrial Average, and I just asked if this is sustainable. You know, you take a look at this big, huge blow off top where it's just going exponential. And is that sustainable? And to me, no, that was just absolutely crazy. So I'm going to zoom in a little bit further. There's a 200-day moving average, and then I've got the RSI, which is the relative strength indicator, and volume. And what's interesting is the declining volume from the crash of '08 until today, just a constant decline in volume. Everybody is long without commitment. They don't really know why they're long. They're just long because the market is going up. But not a whole lot of trading volume going on. This volume that's here is basically the volume that's generated by all of the programs that are causing the trading for all of these funds and stuff, the Wall Street trading, where it's the brokerage houses trading on their own behalf and so on. But the interesting thing is that when you look at this, the market all markets eventually visit that 200-day moving average. Now, the 200-day moving average, if you take the last 200 days, you take the price of each day for the last 200 days and make an average out of that, and you put a dot on the end of this line, and then tomorrow you're going to do the same thing. You're going to add one day to the new day to the end, and so on. So that's the 200-day moving average. Well, what you notice here is that it revisits it quite often, and then we get to late 2016, and there was a 15-month span, which is an incredibly long span to not revisit the 200-day moving average. And guess what? It hasn't revisited it yet. This isn't done, most likely. I expect the market to go down a little bit more, but is that a crash? No. If you look at other drops along this line, you see that they're actually much bigger. And so this is a zoom up of the last 15 months, and what was going on was just crazy. Then we've got the volatility index. If you go to that video, Things to Come, I updated an old article that was about how there were all these days with the VIX closing under 10, and that had only happened 9 days in the previous 20 years. Well, here's those 9 days right here, and then we get into 2017, and it was just absolute insanity. In other words, investors were not pricing risk into the market. And so there's a close-up of all the days in 2017, and then the panic hits, and the volatility index hit 50, which is very, very high, meaning a lot of fear in the markets. Now I'm going to take a look at gold. This is a long-term chart of gold, and one of the things I find interesting is the RSI has now worked off of the relative strength indicator. It's not overbought anymore. Gold has room to run. The little correction that it's been through for the past week or so is actually it doesn't even show up on this long-term chart. It's such a little correction. A lot of people have been concerned about gold dropping in the past couple of days. I have no concern about it whatsoever. I consider it a huge opportunity. And look at the volume increase that has happened across here. This volume increase shows more and more and more interest in precious metals. And this is going to continue. If we take a closer look at what has happened, this is the little drop that we're talking about that people have written in and they're concerned about. there's one trader that's saying that the pullback in gold right now is due to margin liquidation, so margin call, and people are liquidating some of their gold and silver. I don't think that that's the case, actually. I think that it was just due for a pullback, and one of the things that I would like to point people toward, we're going to be putting some links underneath this video, but I'd like everybody, if you can, to read What Happens to Gold and Silver If the Stock Market Crashes by Jeff Clark. This is a very good analysis on what happens to gold and silver in a crash. But also take a look at Clive Monn's gold and silver updates. And what you'll see here is that he's plotted out an inverse head and shoulders pattern, which is a very bullish thing, saying that gold is going up. This was done on January 24th, and he happened to just actually nail the day where gold had peaked. And in here, he's saying there will probably be a short-term reaction, but what it says is that a breakout is imminent, that this will come this year, that the precious metals markets are going to be going up. So he traced out this little tiny pullback right here is exactly... Oops, sorry about that. We just had a little problem with the microphone. We're shooting this on an iPhone. So he traced out this tiny little pullback here, and that's exactly what has happened. And then he's got the bull market happening in precious metals after that, the breakout that he's talking about. And here is silver. Again, he's plotted this little pullback, which has already done, and now it's off to the races most likely. So please take a look at those articles. And then the charts, so this is the pullback in gold right here, and it really isn't that much. We're talking about going from 1360 down to 1320. I mean, so what? This is silver, and again, you can't even see that pullback, but look at the rising volume. And then the RSI has pulled back to where there's plenty of room for this market to run now. So I believe that this is the opportunity right now. It's a gift. And so now we're going to be taking a look at some cryptocurrencies and so on, and I'm going to get into the part for the insiders. So if you're watching this on YouTube, I want to thank you for watching. And this section contains a lot of my the next section contains a lot of my personal investment decisions, and it's for the insiders only. And so I'm going to be talking about some of this stuff publicly, though, in a few weeks at Anarchapulco in Mexico, where I'm going to be speaking. So thank you very much for listening. The rest of this is for insiders. Okay, so I've got a Bitcoin chart here. And one of the things that I see in the Bitcoin chart, you know, if you look at a long-term chart, and this is presented logarithmically, so these are percent changes that are equal percent changes. The amount of pullback here would equal the same amount of percent change here or here. And what I see is...